Hello, and welcome to the Trader Perspective channel. In this video, I will talk about the characteristics you need to be a sustainable and successful trader. There is a lot of content on social media, but most of it is either very superficial or confusing. Many people share untested ideas about how to make money. In this video, you will see a roadmap prepared from a trader's perspective, how to become a trader. Of course, watching this video will not make you start earning money immediately. This is not clickbait. I have been trading full-time for 5 years. I am a day trader. I trade futures and usually close my positions within a few days. I will only explain the methods I use. If you are ready, let us begin. Mindset. First, we need to talk about mindset. You must understand the attitude a trader needs to have. Let me say right away, if you are thinking, how can I get rich in one day? Sorry, this video is not for you. You can close the video and move on. Becoming a trader is more about mental discipline than technical knowledge. In this section, I want to share a few principles and routines. Simplicity. Your trading strategy must be very simple and clear. There is no place for complexity. You cannot trade while watching 20 indicators at once. Of course, you cannot build these strategies in one day. They require many years of work and experience. I know it is hard to find reliable sources among all this messy information. I will help as much as I can. Do not worry. Process focus. As I mentioned earlier, learning takes time and experience. This point relates to that. Trading is a skill. It becomes natural and reflexive over time. Trust the process and be patient. Stop looking for a magic wand. It does not exist. If it did, nobody would give it to you. Accept that it is not easy. You have no choice but to learn the right things. The process is more important than the result. Probabilities. Think in probabilities. Every trade you take is fundamentally a win/loss probability. There is never certainty. Learning to analyze and apply these probabilities is the whole point of the process. A trade failing must be normal for us. We should accept that. Stay emotionally neutral. We cannot do this job while driven by emotions like greed, fear, or anger. These feelings determine the quality of our trades. Of course, we are all human and emotional, but you must accept that you have to control them. Make decisions that are as free from emotion as possible. Adaptability. Adaptability and flexibility. Market conditions change constantly. If we cannot adapt, the market will never be merciful. We will not always make the right analyses, but what will cost us are persistent mistakes. Never be dogmatic. Adapt to trend changes. Planning. Never make decisions you have not planned in advance. As in every area of life, success without a plan is unlikely. Analyze potential losses and gains beforehand. This will protect you from stress and poor decisions. If you do not know where you are going, it does not matter which road you take. With that perfect sentence, we finish the mindset section. You might say, what you listed applies to every area of life and is not specific to trading. That is true. This section may not seem to pay you directly, but with experience you will understand how necessary and important it is. None of the things I have explained is less important than the others. Each is crucial. Now we can start talking about money and math. Our second major topic, risk management. How many winning trades can you have in a row? 3, 5, 15? Maybe, but we will definitely have losing days. There's no such thing as a 100% win rate. That is a lie. When we fail, We must have strict risk management rules to protect our capital and avoid being forced out of the game. We must never compromise on risk management. You've probably heard the term risk-reward ratio. In short, how much are you risking and how much will you gain? It is simply the ratio of loss to gain. Let me tell you about my own strategy. I never risk more than 1% of my balance on a single trade. For sustainable returns, I usually plan to make at least twice the amount I risk. Sometimes it goes up to 3 or 4, but it is typically in the 2.5 to 3 range. That way, even if I have several losing trades in a row, recovering the losses is not difficult. That is the most important factor for my mental comfort. If a losing trade causes frustration and bad emotions, you should reconsider the risk you are taking. Let us make this concrete with a simple math example. If you have a balance of $100,000 and you risk $1,000 per trade, and you would also only make $1,000 on a win, then your risk-reward ratio is 1-to-1. If your win rate is below 50%, you will lose money in the long run, inevitably. In this scenario, trading becomes like flipping a coin. We cannot do that because we are not gamblers. What if our target return is $2,000, a risk-reward ratio of 2? Suppose we lose 2 trades in a row and lose $2,000. When the third trade wins, we make $2,000 and our balance returns to $100,000. 2 out of 3 trades failed and we are still not behind. One more example to show how powerful risk management is. If our risk-reward ratio is 3 and we lose 3 trades in a row, we have lost $3,000. The fourth trade wins and gains $3,000. Our balance is still $100,000. We can have only a 25% win rate and still not lose money. Isn't math amazing? With these examples, I think you understand the point well. You can refine and diversify these strategies over time to suit yourself. We have covered the 2 main headings of the roadmap I prepared for you. I do not want to make the video too long. Stay tuned for the other topic sections. I want this channel to be interactive, so your thoughts are important to me. Please comment and share what you think. I also plan to regularly share market analyses and trade ideas, so subscribe if you do not want to miss anything. Thank you for watching. Do not forget to like the video.